You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
Hi, this is Tom Cock. Cash is one of those things that really makes you feel good, but shouldn't. You know, it's great to wake up in the morning, look at your bank account, see all that money sitting there, and then wake up the next day and see about the same amount sitting there. And then a day after that, wake up and look at your bank account and see all that money sitting there, but it hasn't changed much. Guess what? Rising prices have. Even though inflation's been very low, it does not make sense to keep a lot of money in cash, especially in today's ultra low rate environment. And yet, we have about $12 trillion in cash. Those banks absolutely love you. Banks like Goldman Sachs, they're paying out 0.6% a year in interest. Guess what, folks? They're making money while they give you that very low interest rate. So let's talk a little bit about cash in your portfolio, cash to pay things off, cash heading into the future. First of all, I don't believe in holding cash in a portfolio. The people that do are saying, I expect the price of a security to go down, right? Because I'm going to buy it, or I'm holding it for some purpose. We see no reason to do that. If you looked at my portfolio or clients' portfolios, basically all in stocks or bonds. I think that's very important. If you're borrowing money, this is a great time, right? Those ultra low rates, the average rate on a 30-year fixed mortgage now 2.87. If you have the money and you want to make something on it, it's not so great to be in less risky investments, right? The 10-year U.S. Treasury paying 0.7%. Not much. So what do I think you should be considering about this whole topic about low rates, cash, etc.? Well, first of all, if you do have any sort of loans that are above 5%, I think you should probably be paying those off. With rates this low, it really does not make sense to have any borrowing there if you can afford to pay it. And as I mentioned earlier, mortgage rates especially very low. Yes, they've tightened the standards a little bit, so it's a little harder to borrow the money, but I think for many of you, you'd be able to do that and get that lower rate. I think that's a no-brainer. Number two, I would not hold cash, as I said, in a portfolio. Number three, I would be extremely efficient with my money as I can. What am I talking about? First of all, how much in stocks, how much in bonds? Second, not taking risk with the bond part to try to make more money. What's the expression? More money has been lost reaching for yield than at the end of a gun. That's one of those things you hear around Wall Street, and people need to pay attention to that, especially now, because I can hear all of those wonderful salespeople telling you that you need to run out and buy XYZ security that's paying an interest rate of 5 or 6%, and you're only getting 1% from U.S. government bonds. Do not do it. But I would look carefully at my portfolio and the division between stocks and bonds. If you look, for example, at the bond returns, safe bonds going back about 50 years, you've made somewhere about 5% a year. I would not expect that in the short term. In the short term, we don't know what the longer term may hold. And that brings me to another thing I think you should strongly think about, and that is don't listen to anybody predicting the future, because there are going to be all kinds of people that are going to tell you what's going to happen to interest rates. They have been wrong, so wrong for the last decade. I would not take their word for anything moving forward. So paying off those higher rates, no brainer. Don't keep a lot of cash in your portfolio. Look at your portfolio to determine what rate of return you need and really balance that out between stocks and bonds. And again, don't worry about the immediate future. Think about the long haul. Your portfolio should be built for good and bad times. We never know what might be next. I'm Tom Cobb.
Talking Real Money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?